Hello, 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 hello. Good evening, traders. Welcome once again to today's Trading Digest. Right, today we're going to have a very quick and short session today. All right, let's quickly go through the charts. If you can hear me loud and clear, let me know in the chat. Put it in the chat and let me know. Okay. Let me know in the chats. And then once again, welcome all of you. Welcome everyone watching from everywhere. All right. So I'm going to quickly break down my charts or go through the charts for last week. Then also show some trades that I took on gold. Some trades that I took on gold. Okay. But for the meantime, if you have any pair that you want me to have a look at it, you can put it in the chats. As I said again, if you can hear me loud and clear, please put it in the chats and let me know that everything is good on your side. Okay. Okay, just a moment. Okay. All right. Welcome once again. Welcome once again to today's session. All right. So we have here on the screen, we have our favorite pair, the gold, SAUSD. Gold. So if we go to the weekly time frame, let's go to the weekly time frame and then see what's happening. So on the weekly time frame, you can see that gold has been on an uptrend, moving up and up and up. So the highest points we had was this high. So this is the extreme high. This is the extreme high we have currently. And from where gold is now, this is the extreme low. Let's see. So you can see that we are on an uptrend. If we take in the last area to consider, okay. All right, so this came up. All right, let me look at this. Okay. All right, so I think I've done some marking on the charts already, so it's popping up as I began to. Let me try to delete it. Delete all these ones. Remove. Okay, here we go. All right, so we have the weekly time frame on gold. So currently, this is, as I said, this happens to be our extreme high point where gold got to. Extreme high point. So we had a retracement down here, and then it looks like we're pushing up again. So on the weekly time frame, if we're looking at going up to the continuing, this should be the target. So if anything at all, we're taking a buy, we could be targeting this extreme high. Yeah, so this on the weekly is telling us gold is bullish. We go to the daily. We go to the daily time frame. So the extreme high, that's where I've put this. So we can even put as our area of interest, the supply area of interest on the daily supply. Okay, so and this area currently is our extreme low points. This is our extreme low points. So probably take it from here to there to be the area of interest, the demand area of interest. So attached to this area, we also have this imbalance attached to it, where price has been tapping it already. So with this strategy, with our demand and supply strategy we use in here, it is ideal, or it's good. It's only good when price taps in the first time. Like, that's when you take a trade from there. So after the first time, there's a high probability that it could be broken through. So what I mean is, as we make a break above an area and then we are expecting a tap into that area, as price taps into it the first time, that is the time of high probability that price will tap in and then go away for some profits. But as it keeps on tapping into the area, the more it keeps on tapping into the area, the less the probability, or the lower the probability of its breaking through or failing to move to the other side. Okay, so we have this imbalance here that has been tapped in once, twice, and then price is currently moving sideways. So this is on the daily time frame. So one thing that we have to also be cautious or be mindful of when we are trading is, if on the higher time frame you don't have any proper direction there, it's better you stay away from that particular pair. If you don't have a proper direction, a clear direction on the higher time frame, it's always good to stay away from the charts. But nevertheless, if you know what you're doing, you could devise some other strategy to play it as probably moves sideways or in a range. Okay, so with that said, let's continue our top-down analysis of the charts. Let's continue our top-down. So this is the higher time frame area of interest, the supply zone that we identified earlier on. And this is the extreme high and this is the extreme low. So if anything, we could be targeting these areas from here to here, from this low to let's see, we could be targeting getting some trades from here to here. Just as we've talked about, if we identify the trend to be an uptrend, we are only looking to take trades for the upside, only looking to buy. So in that sense, we look out for imbalanced demand zones. We only look out for imbalanced demand zone. For instance, this area is an imbalanced demand zone that hasn't been tapped in yet. So this is a pending area. This is a pending area. So this now becomes a demand area. So let's also mark the imbalance. So this is the imbalance attached to it. Yes, I can see there's also this area here that has been partially filled by this wick. but it's not fully filled. So price has still got something to do there, something to return and do here to complete a job here. Okay, so this is on the daily charts. Let's go to the 4-hour charts. Let's see what we can find there. So what we are doing, it's something that you can find on any time frame. No matter how small the time frame is, these patterns will repeat themselves over and over again. These patterns will repeat themselves over and over again. So we have here so this area is the area we marked on the higher time frame. So we can further refine this area to this part. So probably we can just so if you come on the 4-hour, we can further refine this zone to this particular candle here, to this particular candle there. So that's where price tapped in from there and then pushed down again. So so that's the 4-hour time frame. On the imbalance area, we can also further refine it to this area. So this is all that you have to be doing. Just keep refining the areas you identify on the higher time frame as you go down the time frames. So we can also put this here to be the immediate area of interest we're looking at, even though we have this higher time frame one here. So this becomes supply. So okay, so let's go to the 2 hours, or let's go to 1 hour just to quicken things. So on the 1 hour time frame, just trying to concentrate on the immediate area, the current areas of interest. So on the 1 hour time frame, this is what we have. We can further refine this. Let's say we push this out of the way. We know the higher time frame area of interest is here, but we want to focus on the current areas that we are presently interested in. So on the 1 hour time frame, we can further refine this area probably to this. Yeah, I think we will leave it at this. We will leave it at where it is now, and then maybe we put our imbalance right here. We will refine our imbalance here. We find our imbalance here. So these are pending areas that we could expect price to be drawn to. We could expect price to drawn to. And as we can see also, there's all these areas of liquidity that is sitting here, resting here, that price can easily tap in and then clear the liquidity above. So once the liquidity here, the liquidity resting in all these areas are cleared. Liquidity resting in all these areas are cleared. There's a high chance there's some imbalance here as well. There's some imbalance at this level that I can identify. There's some imbalance here that we can identify as well, and then another one here. So let me just use an arrow. Another imbalance here as well. So this tells us that price has got some job to do on the upside, as we identify this to be in an uptrend. And again, it's also got some job down here. So if this is, we identify this to be an uptrend, we definitely will want to have an entry somewhere below to take it to the upside. Okay, so last week, let me show some of my trades that I took on this pair. Where are we? Okay, let's go to the 4 hours so that I can show you some things that I made a video and then posted it on the group a week or two back. So over here, this is the 4 hour time frame. We had what is called balance price range, where we have an imbalance on the left and an imbalance on the right. So as I explained last time, when you have a situation like this, this tends to reject price from this area mostly. So let me mark this area. So the imbalance on the left hand side, we take it from here to there. So that's the smaller one. And then on the right hand side, we have this imbalance from here to there. Right, so this is what is called balance price range, where you have imbalance on the right and then imbalance on the left. So we had, because this area happens to be a strong area, for price to go through it, you see how strong or how powerful this candle that crossed it initially was. It took a very powerful candle to cross it initially. So the first tap in was strong, and the second time it crossed it with this bullish candle with all the way to the top, and then came back to test the zone again and then pushed up. So this is the 4 hour time frame. If you go to the 15-minute time frame, we had another one, I think. So we had another one here. So this is the one I marked on the 4 hour time frame. We have another balance price range here, where we have imbalance to the right, to the left, imbalance to the left, and then imbalance to the right. So before then, let me do this. Let's go back on the 4 hour time frame. Hi Joy, welcome. And good evening everyone. Okay, let me take this one back and then we'll look at the one I'm looking at on the 15 minutes. Okay, so we have this balance price range. This is on the 15 minute. The one I identified earlier on was on the 4 hour. So this is on the 15-minute time frame. So this is the imbalance to the left and then imbalance to the right. So normally one of them is bigger than the other. So we can see that the right one, the right imbalance area, is bigger than the left one. So yeah, I said I was going to show you a trade I took on Monday, or this week, some trades I took. So over here we have an area here. We have an area here, I think. So we have a zone here that was identified. I think yeah, we have a zone here that we identified earlier on. So price tapped in the first time, pushed up, and came back for the second time. So normally I prefer to take a trade when on the second leg. So this is the first impulse move to the zone. This is the first impulse move to the zone. The first impulse move to the zone. Yeah, I think let's mark it this way. Then we have some imbalance here. Some imbalance attached to this area that we are looking at. So that's imbalance. This one is our demand area. Okay, so we had this move which broke above, which caused this break of structure here. So with this break of structure, price, so this is the origin of the move that caused the break of structure. So we expected price to come back, and then price tapped in the first time. So I would normally wait for this second leg. So this is the second leg I'm talking about, where this is the first move, then it will traces to the 20 moving average, then give another retest. So this is where I am normally interested in taking a trade from. So when I saw this retest here, this is where I got into the trade with 3 lots. So I got into this trade with 3 lots, and my target was here. My target was, because I know we have this area of interest, this supply area here with imbalance. So this is an imbalance supply zone. Imbalance supply zone. Imbalance supply zone. Yeah, so I had this marked out. So I took my trade from here. I took a buy from here. I went long from here to this high. So when I spotted it's struggling to make any high here, I closed my trade here for about how many? It was about 1:2, which gave me a nice profits on Monday. So, and on Friday I took another trade on this pair. Yeah, with this move I took a quick in and out trade here as it began pushing down. So as we can also see, this is an area, this is a zone that I really wanted to take a trade from there, but I missed this opportunity when price tapped into this area. Okay, so when I missed that on Friday, I got into this trade here with this strategy, with this balanced price range I was talking about earlier on. So normally price will come back, and when it comes back, it normally will tap into the smaller imbalance area. So I spotted this after I missed this move up here. I missed this entry right here, and then I didn't want to chase the trade, so it broke this structure. I know it will come back for a retest, so it created all this liquidity area here. So the moment I saw that this liquidity area has been swept with this candle here tapping into this imbalance a balance price range area that I indicated earlier on, I now went into for this entry again on Friday. So I got into this trade, milked it to this level. So guys, the reason I'm showing you this is something that happens over and over again. So all you have to do is to learn, and then learn how to mark your charts, identify these zones, and only take your trades from these zones. Identify these zones and only take your trades from these zones, because other than that, if you, let's say this trade that I missed out, if I was chasing this trade, maybe entered somewhere here, after somewhere here, like where it gave an engulfing candle here, after that it didn't actually give any proper movement. That's where it slowed down and then came back for a retest, created all this liquidity that was swept before this move up. But again, when I entered here, my target was this previous high, this liquidity area, but I believe this will be taken care of this coming week. These areas will be taken care of this coming week. So what I'm saying is, you can do this. All you have to do is look at the current area, look out for any break of structure, then look for the origin of that move, that impulse move that caused the break of structure, mark there, and then just patiently wait for price to come back to that zone. Once price drops into that zone, you take it from there. Because other than that, and then you just engaging your entries in a mid-price range, that is where most of the losses happen. So this is where I will call it a mid-price range, where price is just moving sideways. It's kind of not doing anything significant that we want to engage in. So as I've laid out, the reason why I got into this trade was I saw equal lows here, and then price came to sweep the liquidity here, all the stop losses, all the buy limits, all the all the limits, orders that has been placed here. Price came down to clear it. So the moment I saw that liquidity have been swept, I got into the trade for a nice move up. And this happens over and over again. Okay, so good. So if you have any pair if you have any pair that you want me to have a look quickly, you can put it in the chat so that I can go through it using the top-down analysis to analyze it. Let me just move to BTC USD. So that's another trade. I took some trade on BTC yesterday. I know it's weekend, but this is the 15-minute time frame. This is 15-minute time frame. So I got into a trade over here. I identified this break of structure here. This break of structure, BOS, break of structure here. So I knew with this break of structure, any movement to the upside, we're targeting this area. So so from this point on, when I saw this opportunity, price has already done this movement here. Price has already retested here, also filling part of this imbalance here, filling this part of this imbalance that was created here. So we have a kind of a huge area of imbalance on the chart. Let me see. On this area in particular, there's this huge area of imbalance. So when I identify this opportunity, price has already tapped into halfway. As I've said this before, anytime you have a very big area of imbalance, your target should be halfway or 50% of the imbalance. So this broken line in the middle of this imbalance area is exactly where price came to tap and then push down. So I got into the trade, I think somewhere here, but again, it kind of began to move down and push, try to further come back to complete the filling of this imbalance, but it got halted just here and then. So my entry yesterday was on here. So we had a breakup structure, wait for the retest. So this is the retest area. This is the retest area. So I waited for price to tell me what it wanted to do. I identified that it was struggling to make any move up. So I took a sell from here, a sell from this area, and then stop loss there. So this was a 1:2 risk reward. So as price got here, I also identified it was struggling to make any move, because initially I was targeting this low for price to come and fill this imbalance here and then maybe tap into this demand zone, but I realized it was just moving sideways and then failing to push any further. So I took my profits out and then that was it. Today I haven't taken any trade. I'm just waiting for tomorrow. Okay, so any pair, let me look at the charts. It says when I look at charts, I see many imbalances. I get confused in deciding which to rely on. Okay, so anytime you see different areas of imbalances occurring on the charts, your focus should be on the extreme one. Yeah, you need to be patient because for instance, over here, where's my arrow? So we have imbalance here. We have imbalance there. We have currently we have imbalance that is being dealt with price here. So there are imbalances all along here. So these are areas that will attract price, or it will serve as a magnet to pull price to those areas to complete or to fill those imbalance area to make the markets efficient. So currently, as the wicks of this chart hasn't traded into each other, it is inefficient. So the moment we have the wicks trading and trading into each other, interlocking into each other, the market now becomes efficient. That's where we say the imbalances have been cleared or been filled. So you don't need to be confused. In a situation like that, that is where I said last time you use confirmation entry. So you still mark your zones there. So for instance, if price gets here, maybe price is coming to this area, you are not sure whether that's the area to take your trade from. All you have to do is to wait for confirmation. You wait for price to break a structure there, come back for a retest, and then you take the trade from there. So this is what I call the confirmation entry. So over here we had price going up, and then we had a break of structure. We had a break of structure here. So once you identify the break of structure in that zone, in your area of interest, all you have to do is to wait for price to come back and tap into the area. So once you have a break of structure, you know that there's going to be there's a change of character. So there's a high probability that price is going to go down. So price taps into this area because there are other areas, other imbalance areas above that we are not sure if price is going to go there. So in this scenario, or in this situation, you use confirmation entry to get into the trade. So you wait for price to break or change of character. Once you have a change of character, because initially it was going up, making higher highs. Let me take this again. Let me put this again, so price going up, making higher highs, and it gets to this area, tap in. So for you to get into the trade, price comes back like this, go back to the zone, and then once you have a break or change of character, what you have to do is to wait for price to come back to tap in here, tap into the origin. So the break of structure is right here. So this is the break of structure. So you now identify the origin of this move that broke or caused the change of character. You identify the origin that caused the change of character. Let me push this back a bit. So this is the break of structure. Okay, let's put it as change of character. Doesn't matter. Change of character, because we've been on an uptrend. So this is a change of character. So once we identify this change of character, you now come to identify your origin. So as we said, we should identify our origin as imbalance supply zone. So this, we are anticipating a sell from here. So we're looking for any imbalance attached to this supply zone. Any imbalance attached to this supply. So this now becomes your, even though we had this there before, now we had a change of character. So you now identify the origin, and this is the origin. So you now will be waiting for your entry here for a sell. So in a situation where we have different areas of imbalances to be filled, we use the confirmation entry. So you enter here, your stop loss goes above the zone, and then your target will be the recent low or the previous low area. I hope that is clear. Okay, somebody say, how do we create that test templates? Okay, all right. Okay, let me see if I can quickly do that here. Let's see. Let me do it here. So I hope this confirmation entry example or illustration is clear. If it's clear, put it in the chat. Let me know so that we'll continue from there. Let me know if it's clear. Okay, so break of structure. Okay, so if I want to create the template, what I will do is I'll just select this tool here, trend line. I'll just put it there. So once I put it there, it gives me, if I go here, you see templates. If I click on that, it says save drawing as template. Save. So if you click on that, it gives you the option to name it. So whatever name you want to put on there. So if it's BOS, you just put it there and then you save it. Because I already have it, it's that's why it's giving me this. It said drawing 10 BOS already exists. Do you really want to replace it? No, because I have it there. So that's basically, that's how you do it. That's how you do it. That's how you do it. So if you click on the settings again, once you do that and you click on the settings, it should give you this box. If you go on test, it gives you this box here where you can type in the name again there, and then where you want it to appear. If you want it to appear in the middle here, you select middle. If you want it to show on the top, you select top. And if it's in the center, you want it to show. So you basically select whichever one, left, right, center, middle, top, bottom, wherever you want to place it. You select the option from here, and then you click OK, and that will be saved on your charts. Okay, I hope that is clear. So that's the same you do for all the other ones. That's the same you do for all the other ones. Yeah. Okay. Let's look at something else. Let's look at if I said that if you have any pair that you want me to have a look at it, you can put it in the charts and then I'll go through that. Other than that, I'll just be going through the ones that I normally go through. So we have DXY. So DXY, it's more or less a dollar index where so if we compare the dollar, the DXY with euro dollar, you can also say euro DXY because it's almost, it is the same as the dollar. So because it is the dollar index. So this is the DXY. If I go on the euro USD, we have exactly opposite of what the DXY is doing. So if you want to, so the DXY more or less will help you to identify the direction of where the dollar pairs are moving towards. So if the DXY is going up, then you should know that euro USD should be going down. So this is a good example of it. We have DXY shooting up here, and then if we go to, okay, better still, let me just put this on the charts. Okay, so let's see if this will show. No, don't. Okay, where is the, yeah, so we can see how this is reacting with, so this is the euro USD, this is euro USD, and this is the dollar index DSY. So we can see how it's doing exactly opposite Euro USD. Exactly doing the opposite of Euro USD. It's like a mirror showing the opposite side. If you look at how the chart is, let me see if I can pull it together a bit. Come on. Come together, come together. Yeah, okay, the chart is refusing to push together as I want it. But in effect, you can see what I'm talking about. So DSY is pushing up whilst Euro USD is pushing. So it's like the opposite pair. Yeah. So now you can see it's better now. So if maybe you want to take a trade on Euro USD and then DSY begins to go up, and then you are in a buy on Euro USD, you should know that you are in the wrong trade. The same vein, if DSY begins to push down and then you are in a sell on Euro USD, that should tell you to get out of the markets quickly. So I hope this this helps with understanding. I couldn't find that icon of small boxes. Okay, icon of small boxes. Okay, Joy, I think once I'm done here, I'll give you a call and then we'll go through that. So don't worry about it. Okay, so that's Euro USD and then DSY. So if you also talk about correlated pairs, let me delete this off. So okay. So for instance, pound dollar and then pound dollar and Euro USD are deemed to be a correlated pair, which does almost the same thing at the same time. So if I should compare that one, okay, let's go to Euro USD and then we compare this one. So I know today we're looking at something extra on top of what we've been looking at, but it's all good for what we've been learning. Unless if you want to ask me a different question, I will look at that in specific, into detail. So let's look at pound dollar, GBP USD. Here you are. Okay. So these are the charts for. So the line chart is GBP USD. That's pound dollar, and then the one with the candlesticks is Euro USD. So these are some of the things that you can have in your arsenal once price one is begins a move to the other side. You can also anticipate that the other will follow suit. So in a situation where you have the one doing something slightly different from the other, that's why we might call it a divergence. But now I just wanted to throw light on this correlation that we have here. So this is Euro GBP and then Euro USD. So if we looked at DSY with Euro USD and then DSY with Euro USD, and then also looked at USD with pound dollar. So in effect, if Euro USD and DSY does the opposite thing, and then pound dollar and Euro USD does the similar things, in effect DSY, and then pound dollar will also be will move in opposite direction when like it's moving. Yeah, so that's something to add to your trading. Any question to look at? So let's just look at let's mark our chart on this one. Let me delete this one, then we have a look at what is happening on Euro USD and see what we can identify on there. Okay, all right, so we have Euro USD here. Let's go to the weekly. Let's do a top-down analysis on Euro USD. So the weekly, we can see that this is the extreme high point on the weekly. So that's a supply zone. Yeah, so that's a supply zone created on the Euro USD weekly time frame. So, but before then, we can read the market structure as pushing up. We always have to be able to read the market structure. So from this low point, we made this high, pulled back to here, made this high, pulled back to here, made this high. Okay, so we made this high. So currently so if I should lift this on the side, we can see, just as we looked at last week, we can see that price is from here making higher high, higher low, higher high, higher low. So this is a characteristic of an upward market, uptrending market. So on the weekly, but currently, as I said, we have to look at the market, what it's doing now. So currently, Euro USD is bearish, because if you look at the last 2 weeks activity, it's more or less bearish on looking at it now. So let's go to the daily. So the daily chart, so that bearish move is what we see here. That bearish move is what we see here. But we know that on the overall direction of Euro USD is bullish, but we have some kind of retracement. If we go back there, probably we'll see there was a break of structure here. We had a break of structure, here, break of structure, BOS. Yeah, so it made this high, pull back, broke this structure. So currently, price could be pushing back to the origin, as we've been learning. So this is the origin of the move. That's the origin of the move. That will be demand zone. That will be demand zone. So attached to this, it's efficient area. There's no imbalance attached to this. If we read along the line, it's all efficient until here. So with this supply zone, we have inefficiency attached to it. So imbalance attached to this supply zone. Imbalance attached to this supply zone. So this is what we have to have a look at when we are looking at it. We have this imbalance. So we have imbalance supply zone here, and then as this is an upward market or bullish markets, as we said, we're only interested in opportunities to buy. So let's go further down and see if we'll be able to identify any imbalance along the line or any other zones. So on here we can also identify that there was a break here. There was a break of structure right here. Break of structure right here. Break of structure right here. So this is the daily time frame. So on the higher time frame, we identify the break of structure somewhere here. So on the daily, we can see that this is a retracement. This is a proper retracement that's pulled back to the 20 moving average area, and then from there it caused a break of structure. So we identify this last, let me take this off, last area. Okay, so let's say this is our last candle before the impulse move that caused the break of structure. Demand area. So attached to this area of demand, let's see if we have any imbalance. Yeah, we have imbalance attached to it here, or close to it. It's not closely attached, but close to it. That is all we want to see. Something that will attract price to that origin. So the imbalance and the liquidity is what will pull price to go in a certain direction. So we have this here, imbalance here. So we can see how price has made a reversal or retracement in tapping into this imbalance area and kind of holding currently at this level. Overall, we know that Euro USD is in a bullish market now. So if we can also read the charts further down, let's see if we can identify any zone of imbalance. So I think we have another zone here, which I believe has already been tapped into. So this zone has already been tapped into. Yeah, so this is fully filled imbalance area. From there onward, going down, oh, it's looking efficient. It's all efficient up until here. There's no inefficiency that I can see from this point to this zone. Further down, this here too has been filled, so there's no imbalance here. There's no imbalance here. So the only imbalance area is this liquidity void. Let's see here. So we have this demand zone here. We have this demand zone here, and attached to this demand zone we have imbalances. Imbalance here, imbalance there. So this is something that can magnetize price or pull price to this zone. But from aside that, from this point on, we have this imbalance here, imbalance there, and imbalance here. So apart from these areas, all this zone is all looking to be efficient. All these areas is looking to be efficient. So we said we're doing a top-down analysis. So let's continue to the 4-hour time frame and see what we can find on the 4-hour time frame. Oh, we've already gone past an hour. If you have any question, just put it in the chat. If you have any question, put it in the chat. Let me look at it and then we'll answer you. Okay, so on the 4-hour time frame, let's further refine our zone. So on the daily, we marked the zone to be this whole area. So on the 4-hour, we have to further refine it to this. Let's look at the current candle that caused the break of structure. So we have a change of character here. So we can we can either put it on this one here. So that's the last candle, or the area of interest that we can identify on the 4-hour. And apart from that, the market is looking all efficient, because I can't identify any imbalance along the way currently. So it's all efficient, There is no imbalance I can identify on the charts from this point on. So the only imbalance which was there, okay, on the 4-hour there was some imbalance here that has been filled with this move down, and then this imbalance we identified on the 4-hour time frame, that has also been filled. So now what we can see here is this one. We can identify that there's imbalance here on the 4-hour time frame from here to here. That hasn't been tapped in yet. So this is an imbalance that hasn't been tapped in yet on the 4-hour time frame. Imbalance. Yeah. So let me take this one to the right first. So we have, let's refine our demand zone as well. So on the 4-hour time frame, our demand zone would now be from this candle here. So that is the origin where the move started and caused the change of character right here. So there was this change of character that occurred here. Change of character, as we can see. So the reason why I said currently, in our current situation, price looks to be in a downward trend. So on the 4-hour time frame, if we read the structure, we have this high point here. Delete. On the 4-hour time frame, if we read the structure, we have this high point here, this low point here. So I'm only considering the impulse moves that caused a break of structure as my point, my data point. So there, then this one, and then we have, okay, let me start again from here. So we have from this point, yeah, we had a break of structure to there. We had another break here to here. We had another break. This is not a break. So from there to there, to this point, to this point, then I'll say here. So this low. So this is what we can read from the current movement, of price action. So if we can look at it, we can see that price is making lower lows, higher lows, lower lows, higher lows. That is a characteristics of a downtrend. So that's why I said on the weekly time frame, when we looked at it, that currently it's in a downtrend. So that's the reason why I mentioned that. But the overall direction on the higher time frame we're looking at is the bullish market. So with this move down here, we can anticipate, if perhaps you tap into this area to sell, the target would have been from there. If you were selling from this area, the target would be looking at is here. We have a bullish move from this point, making higher highs, higher lows, higher high, higher lows, higher high. So we can see that this is an upward trend, making higher high, higher lows. So the moment we had a break of or change of character here, price closed below this data point here, or this low point, causing a change of character. So with this change of character, the origin is from here, from this point on. So if anything at all, you wait for price to come back to this area, So as price came back to this zone and then gave you an engulfing candle, you are good to go to enter the trade anytime from here. Or once you spot this change of character, your entry goes here, your stop loss goes above there. So your targets now goes to this area where we have identified this this imbalance demand zone. Okay, let's continue to refine this area as we're just looking at this for the higher time frame. So if we go further to, let's say, 2 hour time frame, let's see what we can further do. So in the 2 hour time frame, we'll still leave our supply zone just as it is. We still cannot find any imbalance there. So the imbalance there has been filled. It was filled straight our way from this point on. So there was an imbalance here, but it got filled straight away. But nevertheless, we'll just mark it out. We'll mark it out as it happened before. So we can now say this is an imbalance supply zone. So let's refine our imbalance to the downside here. So this now goes here. I hope you can see it clearly. So we now refine the imbalance area to be so this from here to here, and then the demand zone will still remain on that particular candle. So we can further go down to 1 hour. On the 1 hour charts, the demand zone will still leave it at that. It's still valid at that area. Let's see our supply zone. I think the supply zone is also good at that level, so we'll leave it at that. So from this point on, we can see that the market has been very efficient up until this point. So here we can see that we had a break of structure here. We had a break of structure. Here was price made this low. So all this move here, we had the first tap in. So as I said earlier on, these things we are doing, you can find it on any time frame. So we had a break of structure here. So once we spot the break of structure, we have to identify the origin. We have to identify the origin. So it's the origin that we wait for to take advantage of the move. So with this break of structure, we can also identify all these imbalances attached to it. So we will take this as our supply zone. Our supply zone here. Then we also have an imbalance attached to it. So it is an imbalance supply zone. Imbalance supply zone here within this area that we've already marked on the higher time frame, but currently this is what we have dealing with. So we can see that we've created this here. Price came back after all these moves. I know here this was probably a news item that caused this move here. But on the normal circumstance, we can see how price broke below this structure, came back to tap into the zone that we should be waiting to take the trade from. So in any case, for a sell, as we identify that price is currently in a bearish move targeting this area, so with this coming market open, or this week, this is my take. I'm targeting this to be filled. So that is what I see. What do you guys think? Put in the chats. Tell me what you think about this. What do you think about what I've just put? Is it valid, or does it look sound? Is it logical? Tell me. Tell me, and let's close the session with that. Okay. All right, guys. If you have any question, you can put it on the chat and let's look at it. Other than that, we're going to be calling it a day from this point on. So this is on the 1 hour time frame. That's where we have refined it to. So we can further go on to the 15 minutes and do the same thing. So on the 1 hour time frame, this is where this is how it's looking. So if we go on the 15-minute time frame, all you do is look for any break of structure or the areas that we've been refining. Oops. Delete. Okay. I guess the chart is looking very tiny on your side, but I guess you can manage it. Okay, so we have on the, let's see, on the higher time frame areas we've been finding, it's looking very tiny here as we are dealing with a lot of data. So let's see how can we. So on the 15-minute time frame, we can further refine the zone to this candle here, to that candle there, and as we can see, I can identify any imbalance here at the moment. It's only the one we identified on, I think, on the 2 hour time frame. So this is the area that we identified on the 2 hour time frame. So this is the area we've been refining from the higher time frame until our trading time frame, the 15 minutes. So and as you can see, price has been tapping into this imbalance area we identified on the higher time frame. So it's still doing its job. And then if we go to the target zone, the target area, let's look at what is happening there. So the target area, you further refined it. Let's see if we will further refine it or we leave it at where it is. So the target area, will kind of refine it to, let's say, I would say we'll find it to here, and then we can see the imbalance also, the imbalance area right here. Okay, so this is what we are looking at on the 15-minute time frame. So this hasn't been tapped in yet. It's a pending area that we can expect price to tap into it, as it's already started this push to the downside. So we know that this push back here is a move to tap into the origin that broke this structure. So from this point on, we could either get a move to this area to fill this imbalances here. So we have, if we move to the left, so we have these imbalances here that hasn't been filled yet, this one here, and then this one we've marked here. So this could act as a magnet to attract price to this zone. So that is the reason why I've put on here as our targets. If price should continue going down, this is the target area. So with that said, oh, very logical. Thank you. All right. So with that said, that is what we should go in for if you want to take this trade. So the same thing that I've been doing, you can further do that on any charts at all. You pick it from the higher time frame and then you further refine it until you get to your trading time frame, and then you wait for price there. So that will give you a better risk to reward ratio. So if you use the higher time frame zones that you mark, your risks will become very wide. But if you refine it until you get to your trading time frame, like the 15 minutes, it gives you a very narrow area of risks. That's risking one to get. So this trade in particular is 1:6.25. 1:6.25. So the same thing. Let's go in for it. Just keep on marking and keep on doing what you want to do. So let's keep at it, and then remember, no retest, no entry. No retest, no entry. So a good example is here. We had a break of structure here. So the retest is in this zone. So you are waiting in this zone. This is the retest area to sell. A break of structure, you wait for price to come to the retest area and then you sell. Another example is here. We had a break of structure here. A break of structure there. What did price do? Price came back to the origin. This is the origin. Price tapped into the origin. And look at the beautiful sell opportunity it gave. And with this origin, this is a imbalance supply zone. Imbalance supply zone. So we can see that there's imbalance attached to this move as well. Imbalance attached to this move. And that is where price came back. There was a break here, break of structure. Price came back to the zone to test the zone, to tap into the zone and look at the results. So if you tap into this sell here, look at the beautiful reward you would have gotten. Beautiful results. So this was 1:8.29 risk to reward. So perhaps you maybe were targeting this area, this imbalance area we marked on the higher time frame. See where price came to tap into and then shot off again. So if your target was here, you would have been tapped out with a very nice 1:10.21 risk reward. Okay guys, thank you so much. I believe you had value in today's session. Thank you. I'm so excited to have you all here on this journey. So if you have any issue, you can reach out to me and then we'll have a look at it. I think today we've gone a little bit far with our 1 hour session. We've gone 1 hour 22 minutes. So we'll end it here. Until next time, same time next week. Catch you up and stay blessed. Remember, no retest, no entry. Stay blessed. Bye. Okay, so if you are here, you haven't subscribed yet, remember to click the subscription button and also the notification button so that you get notified. Thank you.